Hey everybody, welcome to the Daily Market Commentary for December the 20th. I'm your host, Chuck Fulkerson. Hope you've all had a great trading day. Let's go ahead and dive into it. For those of you that are new to the channel, glad you're able to make it. We look at the same 10 to 12 futures markets every day, and the most important thing is we leave the lines on the charts. Leaving the lines on the charts helps us to see how trades develop over time. So let's go ahead and get in. Not a whole lot to cover today. I did yesterday talk about I expected a bit of a pullback just due to I think that there was some pricing in, if you will, of the tax plan, and that's kind of what we saw was a little bit of a pullback. I in no way am going to be able to capitalize on any of these shorts in the S&P because I'm just not shorting the all-time high. Once again, don't spit into the wind, don't tug on Superman's cape, and don't short the all-time highs. It just doesn't make any sense to me. I'm not going to be willing to do that. I'm not willing to take that kind of risk. Little bit of a reversal at this point here, which I kind of talked about yesterday, but not enough of one for us to really get much of a bounce off of. Still like this area down here for potential reversal if we do make it down into that range. Liked the reversal period, though, better on the Nasdaq, although we've not quite yet made it into that area. So no real changes, if you will, on either one of those two markets. So next, let's take a look at crude oil. And with crude oil, I had just went over this and frankly forgot to hit the record button. With crude oil, we had a breakout long set up right above here, and I had I don't normally erase lines, but I had actually done it just on the recording, and it's me. But it was set up as a breakout long with a dashed line. So let's talk about this for just a moment. Now, and actually it was a bit lower than this. It was set up at the top of this candle's high, right there. Okay, so I got a tweet earlier today from a subscriber, to the channel asking me if we would take this thing based on the fact that it had been basing before. Well, technically, the basing before is not really going to hurt the probabilities of the breakout. Matter of fact, sometimes it's even better for the breakout if you get a decent base before. But your stop loss on this one, because that base isn't a pivot, your stop loss would have to be way down here, right below the prior pivot low. Remember, your stop loss on breakouts goes below the prior pivot low if it's a breakout to the upside. I got to tell you, that's too rich for my blood. I wasn't in front of the markets today to type that one in, but I wasn't willing to take that big of a risk on a short-term trade that was already a fairly marginal breakout. I was hoping that we would get, in a perfect world, what we would have gotten was this little wick up would have dropped us down a bit lower, and we would have got a pivot somewhere in here before then breaking out. That would have been okay, but we didn't get a high quality enough pivot. Technically, you could also, that pivot way down there, that's fairly far away from current price, and depending on your risk tolerance, if you're willing to take it. That being said, we did break above there. There may be a chance to get long on a pullback on a smaller time frame. So if you go to a smaller time frame, somewhere down in, above the breakout, somewhere in this region, maybe there's a chance for a reversal. Let's take a look at gold. So gold, we're looking here at the daily chart, and with gold, we're talking about the candle-to-candle style of trade. We did a video on candle-to-candle trading a couple of weeks back, and gold has really played out as a really good example of that candle-to-candle style. We couldn't find anything on the hourly chart that was a good reversal point in here, so we said that the better opportunity is just to get long when it gets above the reversal candle's high. Here you have a hammer candle. Well, it's not quite a hammer because there's a wick above it, but essentially a hammer candle in a high probability reversing point. You're getting long on the break above that candle's high, and then your stop goes below the candle's low. And then each day you move your stop up below the prior day's low. So in that case, you've continued to move your stop up the whole way. Your target comes into play right here at 1274. We're coming near that target area now. Haven't quite reached it yet, but it is still in play. So it'd be great to hear in the comments if some of you have been able to ride this thing out the whole way. Now, let's go to the other side of the coin and let's talk about the bonds. So yesterday in the video, we talked about this bond area. Now, this bond area was found on the daily chart. And just like we talked about with with gold, we said it could be a potential for candle-to-candle trading. But notice we don't have a higher high yet. So this is still technically a possibility of a turning point, but I need a higher high. That higher high hasn't found itself yet. And if it does, we get a higher high, then maybe I would do candle-to-candle trading out of here. But as of reality right now, it's just not there and it's not showing up. So I'm not looking at this thing yet as a probability until I get a higher high off that daily chart. Looking at the Aussie, so the Aussie dollar still have this potential for a reversal in the Aussie dollar. Today we just kind of chopped around, did a whole lot of nothing, although we could be getting a little bit of a pinch and a potential breakout here in the Aussie as we are definitely pinching sideways. The euro is reaching. It's not quite there yet, but it's potentially reaching. Let's find this on the daily chart. A bit of a reversal point right through here. It's not quite there yet, but it may get there soon. One more thing, just kind of on the euro, big picture wise, I had really felt strongly about getting down to this 115 level. Doesn't look like that's going to happen. And really, when you look at this on a daily chart, not that I'm a huge trend, chart pattern guy, but it is kind of putting in a little bit of an inverted head and shoulders, if you will. So just keep an eye on that going forward. And I'm not a huge chart pattern guy, but there is something to be said. There's a lot of people that do look at them, and something worth looking at and kind of keeping your eyes on. Canadian dollar, we just can't seem to break out below this 7.748 area as the U.S. dollar has been showing some weakness, and the weakness in the U.S. dollar has really given rise to the euros rally, Canadian dollars rally, and so when we do or if we do get a breakdown below here, that still stays in place. There's nothing up here that I'm in love with. I mean, you've got a pretty nice pivot high right there that could be a reversal point in the future. As far as right now, I'm going to leave the Canadian dollar be. Nat Gash, British pound, Japanese yen. So our Japanese yen area that we had identified failed horribly, but that's okay. Sometimes those things happen. We had thought that potentially we'd get a reversal off of the 15-minute level right through here. As we had that little bit of sideways before a very strong rally up. Once again, notice on a breakout, I'm okay with basing a little bit before the breakout. On a reversal, that's not a good sign. So, they're a little bit backwards there. And that's exactly what happened here, is that we had very small profit margin. Prices dropped, base, dropped, base, dropped. And so very, very weak trade, very weak opportunity in here, primarily because of the arrival. Actually, this, and I will tell you, unfortunately, I was not awake at the time and I wasn't really paying attention to it. So I did not capitalize on it. This becomes a descending triangle breakout trade. If you can see the descending triangle pattern here, where we have that bottom, touched it, came back, really kind of broke out on a descending triangle pattern. So just kind of, for something to consider. So not a good setup on that one, but that's okay. You're gonna have. Mama told me there'll be days like this, and and if you're having a hard time getting some of these reversals this time of year, don't feel bad. This is really in my mind, the toughest time of year to find really good opportunities and really good trades, and that's really kind of what we're seeing. It's making it a bit more challenging, but don't give up. When a good opportunity shows up, it'll still be there. It's just not always there at this moment. So with that being said, I'm going to log this thing off for today. If you have any questions, feel free to shoot me an email, chuck@iiefinancial.com. Thank you so much, and I look forward to seeing you again very soon. See you.